What's going on with these stocks? I thought these storylines were done.
Hey, Dom. So good to see you this morning. You too, Carrie. You know, done or not done, I mean, I think we all know that Roaring Kitty, I just like to say that actually on TV for some reason, but he bought more. GameStop was the word I heard on Friday. My dear brothers, the Nigerians, talked about the fact that he bought 50,000 more shares on Friday, and his stock is now worth over $8 million. I'm not saying that's what's driving this per se. It could be a myriad of factors, from management shakeup. It could be some things you and I just don't know about. I think when the news hits the tape, we won't be surprised that it's something major. But right now, this is just a bit of interesting play, shall we say, in game.
So Carrie, I mean, you've seen quite a bit of this type of action play out over the course of your investing career. Is there anything about these stocks, these meme internet type stocks, these Reddit Wall Street bets type stocks, that gets your attention in terms of wanting to invest in any of them?
Well, hi, Dom and Courtney. And I would say that up until a month or so ago, who in the investment professional business knew about the Reddit hot list? I mean, we just got used to looking at the Robinhood top 100. So this is something new we have to pay attention to because of the amount of activity, the volume that's going into these trades. But ultimately, what we really have to care about are fundamentals. Are the names on this list, is GameStop worthy of our investment because of its fundamentals? You know, we invest in a portfolio of about 35 names. Does GameStop make that list? It doesn't. It's a name that we've known in the past. We've owned it in the past. 10 years ago or more, we owned GameStop. It's not something that we would own now. We have to pay attention to the action because money that goes into GameStop comes from someplace else. It comes from Apple or Facebook. It might come from cash. But these are factors in the market that have to inform decisions we make. But it's not because we're buying a list because it's on Reddit.
So Courtney, this is kind of interesting to me only because you can definitely say by the charts that you've made more money in GameStop than you had in Apple over the course of the last, say, 6 to 12 months. Yet there are very different profiles for people who traffic in a name like GameStop versus other stocks like Carrie mentioned. Who exactly should be trafficking in names like AMC, GameStop, Koss, and others?
Well, you know, I think Carrie made two important points. So, Don, before I kind of jump to that point, I think there's two things that we have to remember here. There are people that are trafficking in names, and there are people that are investing in names for the long term. I'm not sure that the traders that are in GameStop are thinking about the long-term fundamentals of the company. And if they are, then they're considered investors, right? So there's a difference. There's traders, there's investors. So we have to kind of segment the two. I can't determine whether or not someone should have this in their portfolio or not. That's up to them or their financial advisor at this juncture. But what I can tell you, and Carrie is 100% right, you have to pay attention to the price action. You have to pay attention to the volumes because it is coming from somewhere. I'm not saying that that's what's causing the sell-off in tech right now, but one might want to think about why it is we are selling off right now, and were people raising cash potentially to buy some of these names in the marketplace. And this is, again, not just a retail play. We saw some block trades going up in games. So I think we have to really pay attention to what's happening, the volumes that are trading, the size trades to understand kind of the flows in the market right now in these names.
So that brings up a good point there to kind of talk a little bit about what people are doing with regard to allocations here, Carrie. When you said before that when you buy certain things, there's always an opportunity cost, right? You're selling something else, you're using cash, whatever it is. What exactly then does seem attractive to you, Carrie, if it's not some of these stocks that are showing 2,000% returns over the course of the last 6 months to a year?
That's funny. 2,000%. I would take that anytime. So what we've been buying on the reopening side, a name like American Express. It sells for under 16 times earnings. People haven't been traveling for business, spending money on their vacations. It's the type of stock that in this market will be helped by higher interest rates and the reopening of all kinds of venues that people used to use for leisure spending. So American Express is one. How about Remax? It's the largest brokerage firm that's public. RMAX, we like that name here. It's a small cap too, and people like small cap stocks. SL Green, it's the largest real estate owner of commercial real estate in Manhattan, is a name that we've been adding to that we like. We also, again, Boston Scientific, very few discretionary surgeries last year. And that's a stock that has underperformed, and we think over the next year or two trades higher. O'Reilly Auto Parts, people didn't drive a lot last year. Mileage was down. We're going to see more driving. The stock has come in, and we find it attractive right here. I also think that you can even make a case for Facebook right here. Facebook is trading for under 20 times next year's earnings. And, you know, the stock has been hurt, as with Apple, Amazon, and all of the things have come in under pressure because of money moving elsewhere. That trade will turn around at some point, and we would be a buyer.
Carrie, it's why we have you as a CNBC contributor here. I mean, you got so many names on your list. You're always keeping track of all these stocks. Courtney, what about you? What's on your shopping list these days? Where are you finding value? Where are the best returns for you and your profile over the next 6 to 12 months?
Well, you know, it's interesting. So on my personal portfolio, because I leave the professional stuff to our clients and to Carrie over here, but for my personal portfolio, I really do run a barbell approach. I mean, I have a much longer time horizon than one might think, and so I can kind of balance a lot of growthier names with value names. So I did buy API, which think Clubhouse, think China Play. It sold off back to where it was a few weeks ago, and I think it still has a tremendous amount of room for growth. I added to Square again. Square should not have sold off. I mean, let's think about the 36 million monthly users on Square and the potential for continuous growth in the long term. Think Cash App. I love Square, and when it dipped down below, I think it was around 235 or so, I got back in again and added to my position. I added to Walmart. So think about the other side of that pendulum. You think about a Walmart, right, where they missed, which is a rarity for them, but it's Walmart. You can put it in your back pocket and go to sleep, and, you know, 10 years from now, you'll still have had a 16, 17% return. So am I knocking it out of the park with a Walmart? No, but I have names that can knock it out of the park over that same time horizon and have it balanced with some names with potentially a little less risk and volatility in them.
Shepard Smith here. Thanks for watching CNBC on YouTube.